this is Zach from Zach's Traders Cafe with a look at some single stocks on Thursday, the 13th of October. Starting off with Hurricane Energy, private investor favourite at the moment for obvious reasons. Stock's been rising sharply within a rising trend channel in place since May. Top of the channel heading towards 50p in that target value while we hold above the floor of the channel, and the 50-day moving average just under 33 pence. RSI is still above 50, which indicates that the uptrend here, or the breakout here at least, is still very much underway. On to Persimmon, house builder. A bit of a bounce here for house builders with the latest RICS data, which was positive in terms of September. And it looks like we've got a rising trend channel here, which the shares have bounced off towards the 1660 zone. Top of the channel heading towards £20. Which will be the target over the next month to 2 months. If you're cautious on this, which some may be still, you wait for an end-of-day close above the 50-day moving average at £17.85. On to one of the FTSE's leading lights over the past year, which has been Rangold Resources. Bit of a dispute at the moment, and it's in Mali, I believe, or West Africa, but at least at the moment, on a technical basis, we've got the shares near the 200-day moving average at 68.10, while there's no end-of-day close back below that. We're looking towards the main resistance line there from July and the 50-day moving average at 77.42 as the target over the next 4 to 6 weeks. REDX, RedX Pharma, request by a TipTV viewer, so obviously it appears here today. We've got a rising trend channel here from August, floor of the channel towards 54 pence and the 20-day moving average. Ideally, support comes in at or above that old September low there at 48 pence. And while we're above that, at least, we've got a target as high as 80 pence plus the top of the August channel. If you're cautious, maybe you'd wait for an end-of-day close back above the 10-day moving average at 58 pence. Before taking the plunge on the long side. W. Smith company reporting today. Here we've got a situation with the shares stabilizing quite well above £15 over the recent past. Uptrend line there from the end of June, running towards the £15 level, and a good break above the 50-day moving average at 15.56 so far today. While there's no end-of-day close back below the 50-day line, we're looking to the 200-day moving average at 1665, RSI at 57, so just getting underway in terms of the buying scenario or recovery scenario there. On to Tesco, currently grappling with Unilever in terms of their brands and the pricing. Here we've got a situation where we had the break through the 200 pence level. Got a bit of a problem here with an island reversal formation, gapping up and then gapping down so far in October, but at least while we're above the 20-day moving average at 187. Looking for a target as high as £2.20. The bottom of that gap, 189.85. So again, ideally, there's no sustained price action back below that initial gap floor for October. Finishing off with Unilever, which is the other side of that spat. Interesting that the shares have gapped down here too, but back below the 10-day moving average is 37.09 and back below that old resistance 37.16 for July, which smacks of a double top bull trap reversal. Ideally, I suppose, for the bulls, the shares won't fall below the 50-day moving average of 36.06, and it probably doesn't look as though they will. But if they do, the next target down would be back towards the floor of this rising trend channel from the beginning of the year. At the 200-day moving average at £32.80 is a worst-case scenario over the next couple of months. That's it from me. More updates at the same time tomorrow.